Good morning. This is Ron Brown. I'm recording this on the morning of June 18th, 2023. This is something I'm going to be doing going forward if people like it. I'll see what the response is, but rather than do a market analysis, because there are all kinds of market analysis out there and opinions, and those opinions really don't mean anything because it's all history. I'm going to concentrate on doing something else, and it's going to show the capabilities of the software, and to try to really cut down upon analysis time. So going forward, I am going to follow the rules of the game here. I'm going to do something different. Like I said, 25 stocks are generated daily from each of my 2 user smart groups. Now, these smart groups are already available to Insider Club members if they do an update. And my intention is to look for lower risk entry setups. Now, one scan locates stocks where the 3 and 6 day exponential moving averages, where the 3 has crossed the 6 within the past 2 days. The second scan locates stocks that are pre-crossover. I'll use both daily and weekly charts for analysis. All trades are random. No matter how much analysis you do on a stock, all trades are random. That's why you need to control your risk. Just because a stock is setting up doesn't mean it's going to go up. A lot of these stocks will break down. They just won't rebound. I will save the user smart groups each weekend and look at the results the following weekend. I'm capturing them with Snagit and putting them in OneNote. As I mentioned, some will never break above their buy point, and those that do will be heavily influenced by the broader markets and their industry groups. That's very important. If you like what you see, and if you'd like to cut down on your prospecting time, make sure you subscribe to HGS Investor and my Insider Club. Standard risk disclaimer: any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Stocks, futures, options, there's a great chance you will lose your money. So control your risk and know what you're doing before you get involved. Now, you can get a free 30-day trial of HGSI in my Insider Club. If you're new to the software, just go to highgrowthstock.com and you'll find the link to the trial. The smart groups that I'm showing and using, they are in the files for the current members of the Insider Club, and also in the webinar files that I'm working on. Okay, so I'm going to get started and show you what I'm up to. These are the 2 user smart groups. Now, user smart groups, for those of you who don't know, are smart groups that are made from filters and combo rankings, and these are fields within HGS Investor, and you can do a lot of things with these filters, so whatever you can imagine, really, if the fields are available for what you're trying to do. Now, let me point these 2 out. End of day instant watch list, fan up. The fans are up. 3 and 6 crossed above already after the pullback, and there are 25 stocks. This one, number 2, these are stocks that are still setting up. The 3 has not crossed the 6 yet. Now, the one I have up here now is the fan up. The 3 and the 6 have crossed over after a pullback, and if you look at this column right here, it's days since the 3 crossed the 6, and you can see it's either a 0 or a 1. If it's 0, that means they crossed over on Friday. If it's 1, it means they crossed over on Thursday. Now, this column right here is the volume point of control, 10 days or 10 buckets, and the same thing, the number of days since it's crossed over. Now, as I come down here to this stock, you can see that crossed over 5 days ago on the volume point of control, which is represented in this chart here by the green arrow. So if I click on this chart, you can see that this green area, not the green arrow, has been green for 5 days. So right here on this candle, this turn went from negative to positive. But this is all the information that you really need to know about the crossovers in these 4 columns. This is up, the 3 crossing the 6 up, 3 crossing the 6 down. I'll set up some smart groups to look for shorts also. Same thing, I'll just reverse the process. This is today's sense of volume point of control, up and down. There's also a lot of other important information in here. The relative strength rank, Kirkpatrick relative strength, which measures 26 weekly closes. Different way of measuring relative strength, the performance versus the S&P 5 and 10 days. And then here's the percentage price change 1 day, beginning of the week, which is Monday mornings. So it'll be Tuesday morning in this case because of the holiday, but that'll tell us how these stocks did during the week and where they closed in their range, what industry they're in, and so on. And then over here, there are VPA signals. This is why I'm capturing this information, so we can come back and look at it a week later. I'm going to bring this up. This is OneNote for Windows, and you can see I've captured the screen right here for both of these. And next weekend, I will compare each one separately. In other words, I'll compare the crossovers to the following week, and then those that are setting up but have not crossed over to the following week. So I'm going to document this, in other words. Now the view that I'm using is my basic scorecard view in my files. It's under Ron's Daily Prospecting Scans. It's view number 1. The combo rank is based upon both technicals and fundamentals, and it pushes the stocks to the top that best fit it. Now these columns right here are what I call the Wyckoff columns because they're based upon volume, spread, and close. Very important, and you can see this stock right here, PAM, closed volume was very high, the spread was wide, and the close was very high. And let me bring that stock up. I'll double click on it. I'm going to be using both daily and weekly charts. Now this information right here is also contained here in this part of the chart. So going over here to the right, I'm going to use this chart, and I'll be using, that's chart number 2, and I'm going to use 2B also, which eliminates the moving averages except for the 3 and the 6 and the 18. And it also gives us a comparison of, you can see what the industry is doing, which is cyan. It's labeled up here. And the green line represents how the stock is performing relative to the S&P 500. The group rank is in here. You can see this is in the utilities. So in this particular instance, the group is up, going up. Let me make it full screen so we can see this better. The group is moving up, and the green line is moving up also, which means on this day, this stock was outperforming the S&P 500. I'll probably use this chart the most in these videos just because I can flip through easier. Now this is the weekly chart. You can see that the trend is up on the weekly chart, and for the weekly charts, when I do my analysis, and I will not analyze all these, it would take forever to get through 50 stocks, so I'll just do a few of them each week, but we'll compare the results. I will compare the results of all of them every week. What I'm looking for are price trend changes or price continuation based upon 3 higher highs and 3 higher lows. If a stock hits a third higher high, then it is in an uptrend. I'll open this up. I'm going to put a line across here. So in this instance right here, there were 3 lower lows, so it was in a downtrend. Now to get to a uptrend, you compare it to the prior week. Now this was obviously not a new higher high, but at this point right here, there's the first higher high, When this one went higher than this, that's the second higher high. And then when this candle went higher than this high point, that's the third higher high. So this trend changed from down to up. Now, this candle here did not get lower than the prior one, so this would be the first lower low right here when compared to this low over here. And then here's the second lower low, but the third lower low was never established, so it remained in an uptrend. These two candles, I should say, pulled back, but they didn't establish a third lower low. So it is in a long-term uptrend based upon the weekly chart. Now, you can do the same thing with the daily charts. You can look for pivots. This would be a pivot here. I'll bring this up here. This is an example of a pivot right here. Bring an arrow up here. Okay, here's your low pivot right here. There was a candle higher. The high was higher than the high on this candle. And then when this high was taken out with this candle right here, that is a buy point. So here's your low pivot, and then there is a buy. Now you can see that it hesitated the day after that, but then it took off. So these are the kind of things that I look for. Now here's a low pivot here, because you can see the high on this candle was higher than the current candle, and then when this high was taken out right here on Friday, that would be a buy point, and your risk would be down below this lower pivot. Now that's a pretty big move on this, so the risk is higher. The buy point would have been in here, but I'm just pointing out pivots right now. And let's see what else happened here. The 3 went above the 6. There was a volume pocket pivot, and the volume point of control also turned positive. Looking further. Okay, here is a higher low pivot. Higher than this one. This obviously is higher than this one. This pivot's higher than this one. This pivot's higher than this one. And then we had a pullback, and now a new pivot is established after this. So ideally, you want to find a trending stock and look for a series of higher low pivots. Also, the larger time frame normally dominates. In other words, if the weekly time frame is going up, it's the dominant chart. Changes, of course, always take place in the lower time frames. I use on Thinkorswim, I use a 16-minute, 78-minute daily and a weekly chart, so you can actually see these changes evolving. I don't want this video to be too long. I'm just kind of explaining what I'm looking for and will going forward. Let's do another chart or two. So this one crossed over on Friday. We can see that. Let's look at another one that crossed over Friday and see what it looks like. What's the time frame on the weekly here? It's in a weekly uptrend with the third higher high rule. Let's look at the daily chart here. This low pivot, this would be a low pivot that was established here. This high is higher than this high. This low is lower than this low. So that's a pivot. So when this was taken out right there, that is a buy point. And notice there's an effort to rise. It's outperforming the S&P, and it's going along with this group. And this group is the biotech groups. There's a lot of information in here. There's also a volume pocket pivot on Friday. and the volume point of control actually turned positive on Thursday. Okay, let's do one more. Here's Canadian Solar. That's a stock that's been around for a while. Let's look across here. On the prior stock, very high, wide, and very high. This one, the volume is high. The spread, the actual spread of the body is below average, but the close is very high. It's crossed over a couple of days ago. It's crossed over on Thursday. Relative strength is 85. The Kirkpatrick is 78. It's outperforming the S&P by 7% and 2% over 10 days, 7% over 5 days. Renewable energy. There is an effort to rise. Not yesterday, it says no, but the day before there was an effort to rise when it started moving up. So let's take a look at this stock. Weekly chart, it's really not trending at all. You can see that. It's just chopping around back and forth. The relative strength of the S&P slightly up on the weekly chart. Let's take a look at the daily chart here. You can see, looking at this daily chart, think back just a few seconds ago about the weekly chart, about how it wasn't trending. It's not trending in the daily chart either. Very volatile. Let's look up here. It's outperforming the S&P. It's trading along with its group, so the group must look pretty choppy like this too. Here is a low pivot, and actually this is not a true low pivot, because this high here is higher than this high, but here is the pivot low, and for it to be a buy, if you do want to consider it a low pivot, or it is a low pivot, but it doesn't meet the exact criteria, but the buy point would have been right in here as it took out this high and that high on the effort to rise. And you can see that on the 3 crossed the 6 on that day, and there have been 2 volume pocket pivots and a volume point of control also. But also remember, looking at the weekly chart, keeping that in mind, if I draw an arrow across here, you're probably going to face resistance up here again, because some of these traders right here, if they're still holding this stock, they probably want to get their money back. So it's not a nice trending stock like I like to see. Okay, I'm going to stop with that. Let's go down to the other smart group. These are stocks, as you can see, looking down this column right here. They have not crossed over yet, and this is the number of days that they've been down the 3 below the 6. Some of these, let's sort on this. This one's been down 9 days. Riot, which is, I believe, a Bitcoin-related stock, been down 10 days, and the volume point of control actually turned positive yesterday. I might not analyze it, but let's take a quick look at this. You can see 9 days ago is where the 3 dropped down below the 6. If I put a crosshair on here, that's where it happened, right there. And now it's finding support, and it's got a strength seen returning VPA flag here. This is a no supply. This was a test. So it's trying to hold here, but you've got all kinds of resistance through here. Remember, the 3s are still below the 6. I'm going to sort on the combo. I'm going to bring up a stock which best fits the combo. Very high, above average, very high. 2 days, pulled it 3 cross the 6 down 3 days ago on the would be the 0 day, but the relative strength is 94, Kirkpatrick's 97, and so on. This is in healthcare. There was an effort to rise yesterday, so let's take a look at RadNet. Okay, I'm going to look at the weekly chart first. You can clearly see that RadNet is trending up. There are no weeks here where there were 3 lower lows in a row, so the trend is clearly up, and it has been for quite some time. And let's take a look here. You can see the pullback 3 days ago where it gapped down. I don't know if this was earnings or what it was, but let's start at the top here. It's performing a slightly less than its group, the cyan, but the green, it's up, so it's outperforming the S&P. It had a really nice chart going here until this gap down. That was an effort to fall on very heavy volume, but buyers stepped right back in to support it. And here's an effort to rise. Now, if I were to trade this as a low pivot, and this, you can see that this is higher than this. So if this area is taken out here, that would be a buy on a low pivot. Now I'm going to clear that out. If I can get my mouse to work. And I'm going to zoom in. And I want to show you what the risk would be on this using the risk tool. So the stop would be approximately there. The buy would be approximately right there when that is taken out. So the risk on this would be 6.74% approximately, which is more than I'd like to risk. But you're going to position size based upon the risk amount. You're not just going to buy a flat number, or I wouldn't buy a flat number of shares. I'm only allowed to buy X number of shares based upon a spreadsheet that I have. And I would be in the trade. But the best part about it is I know what my risk is going in. So it's trending nicely. It was until this happened right here. And earnings are due in August on the 8th, so probably wasn't an earnings event. I would have to look at the news on this. And I'll show you this quickly. I use bar chart, the ad-free version. It's worth the ad-free version, $60 for 2 years, and it's worth it to get rid of those ads. And you can see this is in a strong buy. Let's look for news here. Well, back on the 9th, which was over a week ago, you can see that it reported a first quarter loss, but it topped the residue. Okay, here's an IPO. That's why it gapped down. Okay, well that explains that gap. So if the news is being absorbed about the IPO, it could go right back up if this is perceived as a good buy going forward. Now, the weekly chart is extremely strong, and this IPO downdraft, that has to be overcome. This gap has to be filled for it to go back up. Anyway, let's do one more, and then I'm going to end this. You can see it would take forever with my talking to go through 50 slides, but I can do it very quickly by myself just by looking at the daily and weekly charts. Now, I wouldn't spend a lot of time on this. The trend is still up on the weekly because there haven't been 3 lower lows on Merit Medical. But if I bring this up and look at this, it's going to have to get past resistance. Put the crosshair on here. You can see there's resistance here, but there is strength seen returning here. So it's not certainly not ideal, but here's your low pivot, and really theoretically it would really need to take out the high of this right here for that to be a buy, but then you're going to run into resistance. I think I would pass on this, but we'll see how it does next week when I follow up on these. So like I said, I've captured these. What I'm going to do is capture them next Friday and put them, we'll compare them week over week and see what happens. Now I'll do this when I'm in town. If I'm not in town, I won't be able to do it week to week, but most of the time I'll be here, so we'll see what happens. If you like this format, let me know, and I will continue. Now, I'm doing this for the webinar series, but also I'm just putting this out for the general public to see, so you can see the power of HGSI and how I look at stocks and use the weekly and the daily charts. Thanks for listening. Have a good weekend.